All right, here we go with another practice problem to work through. This one is also from chapter 8. Um, I chose another chapter 8 one because it incorporates a lot of chapter 6. And the longer problem from the quiz is a good pure chapter 6 review. And I'll post a video going over the quiz after that's due. All right, so I'm going to share my screen here. Okay. And so this problem is going to give us a bunch of facts. And if we scroll down, we can see the first question it's going to ask is to determine Reba's federal income taxes due or payable for the current year. So Reba is a fifth grade school teacher who earned a salary of $38,000 in 2019. So I'm going to put that 38,000 salary as a part of her gross income. She's 45 years old. All right, so she's not going to be eligible for an extra standard deduction or anything. She's been divorced for 4 years. So filing status, we don't know yet. Why? We know she's not going to be married filing jointly or married filing separately. We'll need to find out about dependents before we know if she is a head of household or single. She received $1,200 of alimony payments each month from her former husband. Their divorce happened in 2016. All right, because that was right prior to 2018, we are going to count that as income for Reba. So that $1,200 per month times 12 months is going to be $14,400 alimony. All right, so on the income side, right, this exam is not, that's a more of a chapter 5 issue, right? So don't worry too much about it. Right, but you would need to know about the deductibility of alimony for the person paying it, like in the John and Sandy Ferguson problem that we did. This year, Reba received $50,000 of rental payments from tenants. All right, definitely gross income. Let's see. And she also incurred $19,500 of expenses associated with the rental. Right, so rental expenses, right, whether or not it's an active business or an investment, those rental expenses are a 4 AGI deduction. Reba and her daughter Heather, okay, so now we know she has a daughter who's 20 years old at the end of the year, moved to Georgia in January of this year. Reba provides more than 1/2 of Heather's support. They had been living in Colorado for 15 years, but ever since her divorce, Reba has been wanting to move back to Georgia, yada, yada, yada. Luckily, last December, yada, 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 they moved. Reba paid a moving company to move their belongings, and they drove a certain amount of miles. All right, this one is testing you. Are moving expenses deductible? And they are not. So there's nothing that we have to do other than recognize the issue, understand moving expenses are not deductible unless you're a member of the armed forces. Reba rented a home in Georgia. Heather decided to continue living at home, but she started attending school full-time in January and throughout the rest of the year at a nearby university. All right, so now maybe we know enough about Heather to figure out if she is a dependent for Heather for her mom's filing status. So she's 20 years old, full-time student, and mom pays more than 1/2 of her support. Let's see. So, is Heather a qualifying child? Age? Yes, right? Because she is younger than 24 and a full-time student. Residence? Yes, she lives with her mother other than absences for school. Support? Yes, right? The problem just tells us her mom provides more than half. And relationship? Yes, it's her daughter. All right, so, right, once again, that's more of a chapter 4 issue. You're not going to have specific questions on this exam about, right, those tests, but it helps us for this problem, right, to know her mom can file head of household. She's got a dependent, right, qualifying person who lives with her more than half the year. She provides a house for. Okay. But what is going to be more relevant for our exam, right, because it's a chapter 8 issue, is that Heather was awarded a $3,000 partial tuition scholarship, and Reba helped out by paying the remaining $500 tuition cost. Right, so the scholarship is not income, right, but it's also, right, since it's not deductible or eligible for a credit since she got the scholarship, but the $500 of tuition paid is. So if we look here under credits, and we can think about, right, since Heather is 20, we're going to presume that she's in her first 4 years of education. She's not some kind of Doogie Howser situation. And so she would be eligible for the American Opportunity Credit, which is the best education credit. So if you remember, you're eligible for 100% of the first $2,000 of expenses, and then 25% of everything above that, up to $4,000 total. Right. So here she's under $2,000 total, with the $500 tuition is the only expense that they actually paid. And so this is just going to be $500 American Opportunity Credit, right? We need to make a note here. Is there a phase out? Before we can know if there's a phase out, we have to know Reba's AGI. All right, it tells us Reba wants to claim an education credit for the expenses if she can. All right, so we got to hold on to this one. Reba wasn't sure if she'd have enough items to help her benefit from itemizing on her tax return. However, she kept track of her expenses in case she might qualify. So she paid $5,800 in state taxes. It's definitely something that's eligible for an itemized deduction. So I'm going to put 5,800 state income taxes. What else does it tell us? She gave 12,500 in charitable contributions during the year. It doesn't tell us more than that. We're going to assume that, right, those are all eligible to qualified charities, and that's the amount of the deduction. She also paid the following medical expenses. So we'll think about medical. So our first step is to come up with the total qualifying expenditures. See what we have here. Insurance premiums, right? The ones that Reba paid herself, definitely eligible. Medical care expenses, right? I think we're supposed to presume that those are eligible. Prescription medicine, $350, yes. Non-prescription medicine, no. And new contact lenses for Heather, yes. So she's got 9,242. But for 2019, she's going to have to subtract 7.5% of Reba's AGI. Right? Before we do that, we want to make sure that we've got all of the income and 4 AGI deductions. So we need to know her AGI for sure before we get there. So we're also going to put make sure that we come back to this. Shortly after the move, Reba got distracted while driving and she ran into a street sign. Right. The accident caused $900 in damage to the car and gave her whiplash. The repairs were less than her insurance deductible. She paid the entire cost of the repairs. They got no insurance. She wasn't able to work for 2 months after the accident. All right, so first here, all right, the issue is she paid $900 in damage from this accident. Right, so in prior years, this might have been a casualty loss deduction, but now because it's not a federally declared disaster, she can't deduct it. Right, so so we're done with that expense. Reba wasn't able to work for 2 months after the accident, but she got $2,000 from her disability insurance. All right, so this is going to be more of a Chapter 5 issue. Don't worry about it for this exam. All right, hopefully you remember this. Her employer paid 60% of the premiums on the policy. She paid the other 40%. So disability insurance benefits are income to the extent that your employer paid for them. So since they paid 60% of those premiums, right, once again, hopefully you remember that, but if you don't, not an issue for this exam. All right, but we have to put it in here to make sure we get the right income number. The other 800 she can exclude because she paid the premiums. A few years ago, she acquired several investments with her portion of the divorce settlement. So this year she had the following income from investments. $2,200 of interest from corporate bonds. That's definitely gross income. And $1,500 of interest from City of Denver municipal bonds. That is income that she can exclude, right? So we don't have to write that down here. Overall, her stock portfolio appreciated by $12,000, but she did not sell any of her stocks, right? She's wishing she would have sold now. Right, but since she did sell, right, we don't have any realized income, nothing to report here. Heather, the daughter, reported $6,200 of interest income from corporate bonds that she has received from her father, right? Because she owns the bonds, her father can shift that income to her. And we'll make a note down here under Heather that in case it becomes relevant, she had $6,200 of interest. Reba had $10,000 of federal income taxes withheld by her employer. Nice round number there. Withholding under prepayments. Heather made $1,000 of estimated tax payments during the year, right, related to her interest. So for Heather, in case we need to know it, we're going to put $1,000 of prepayments, right? Putting this under Heather, the daughter. Reba did not make any estimated payments, right? Employees don't usually. And she had insurance that satisfied the Affordable Care Act. All right, so that's all of our raw info. We can calculate her taxes. All right, so if we add up all of her gross income, looks like we should get $38,000 plus 105,800. Gross income. And I think the only 4 AGI deduction that we ended up with was the rental property. So my AGI will be this gross income, right? Their deductions are going to be negative, minus 19,500. Her AGI is 86,300. All right, now that we know the AGI, we can figure out her medical expense deduction. So we're going to take 7.5% of that AGI. And right, I'm just going to turn it into a negative here because I'm going to subtract that from the total medical expenses, 9,242. So I'm going to get a deduction, 2,770, round that up. Okay. And correct, okay. All right, so that's all of our itemized deductions. So those are going to add up to $21,070. Itemized deductions. So let's see here. Right, you probably remember already, right? But we figured out that she is head of household. Her standard deduction would be 18,350. And that's clearly less than her itemized deductions, so she's going to itemize. The QBI deduction, right, is only for people with self-employment income. And because the rental income, right, she does have income, here we go, rental payments outside of her job, but that's not earned income, it's unearned income, it's investment income, which is not eligible for the QBI deduction. So she's not going to have any deduction for qualified business income because she doesn't have qualified business income. So if I then take her adjusted gross income minus the itemized deductions, I've got 65,230 of taxable income. And so I can go ahead and calculate her tax liability. And now I want to always pause here and think carefully about what kinds of income I have. So if I go back and look over her income, salary is going to be ordinary income. Alimony is ordinary income. Rental payments, right? It's investment income, but it's taxed at ordinary rates. It's not a long-term capital gain or a qualified dividend. Disability insurance, that's includable, is ordinary. And interest, right? It's also investment income, but it's taxed at ordinary rates because it's not a long-term capital gain and it's not a dividend. Right? So all of her income should be taxed at ordinary rates. So all we have to do is look at the tax rate schedule for head of household. We'll take her taxable income minus, where's her bracket? She's going to be right here in the 22% bracket. So minus 52,850 times 22% plus $6,065. All right, so I'm going to take this and round it up to 8,789. All right, so our credit that we already noted was the American Opportunity Credit, but we made ourselves a note, we have to think about the phase out. So if we need to look up our phase out information, I'm going to pull up, where do I got it here? My phase out information. Here we go. Have it here. Here we go. All right, so this is something, right, you will have on the exam. And I want to find the American Opportunity Credit. It's phasing out pro rata from 160,000 to 180,000 for married filing jointly. For all others, including Reba as head of household, it goes from 80 to 90,000 of AGI. So she does have 80,000 at least of AGI. So we do have to do a phase out here. So her AGI was 86,300. I'm going to subtract the bottom of the range, AGI minus 80,000, divided by the range, 10,000. So my phase out percentage is 63%. So that means that $500 times 63% is the amount that I lose. So I'll take my full credit minus the phase out, and I'm left with $185. All right, so I'm going to bracket all of this, and $185 is the amount of the credit that I actually get. And we also want to think now, are there any other credits that Reba can get from the information that we have? And so she has a daughter, Heather. All right, so we could think about the child tax credit, right? But the child tax credit is for children younger than 17 at the end of the year. Heather is 20, so she can't get the child tax credit, but she is a qualifying child. So we know somebody who's a qualifying dependent who can't get the child tax credit can get the credit for other dependents. All right, so she can get a $500 credit for other dependents or other dependent credit. You'll notice the book sometimes calls this credit a child tax credit too. I think they're a little loosey-goosey about it, but there is an argument you can make under the tax code that you could call it a form of a child tax credit. I'll take that into account when I grade the quiz and anything else. All right, so her total credits then are 685. Okay. Credit for other dependents. All right, so I think we have enough information now, right? She shouldn't owe any self-employment tax because she doesn't have any self-employment income. Her other income is investment income. So we would want to think about this for a second. Let's go, right, with this rental income, right, she had on net 50,000 minus 19,500 of expenses equals, can I do this in my head? 31,500 seems right. All right, and her other, she had interest income of 2,200. All right, so why I'm writing these down here is Reba subject to the net investment income tax because she has investment income? All right, so it's going to be the lesser of this investment income, right, 33,700, or right, her AGI minus 200,000 because she's head of household, right? Clearly, her AGI is less than 200,000, so she's not subject to the net investment income tax. So there's no other taxes. We can tell pretty easily, right? Someone with this modest of income without a bunch of things that she would add back, right? All that she would add back for AMT is the state taxes. All right, you can be pretty certain, right? Someone with this income in this range is not going to have to pay the AMT, and the question doesn't ask about it. All right, so now we're just going to do our formula. All right, so we've already gotten down to tax liability. We'll subtract the credits. All right, that gets her liability down to 8,104, and we'll subtract the amount that was withheld from her paychecks. All right, so we're left with negative 1,896. All right, that's a negative number, so she's going to get a refund. All right, so that's the first part of our problem. And we're gonna, I think that's all I wanted to say about that. So get rid of this here. So if we go back to the problem, part 2 of the problem asks, determine the amount of FICA taxes Reba was required to pay on her salary, right? And obviously this is going to be withheld for her and paid on her behalf by her employer. So if we look at her income, only wages, right? These are called payroll taxes or employment taxes. These are just on employment. So the alimony, rental, disability, interest is not going to be subject to FICA taxes, just her salary, right? Or wages from a job. So I have a FICA taxes section down here. All right, so she's going to pay 7.65% on here, right? Which is the 6.2% Social Security plus 1.45% of Medicare, right? So that's where that number comes from. All right, so this is a simple case. She's clearly below the cap for Social Security, so she has to pay the Social Security rate on all of her income. She's not self-employed, so she's just paying the normal, right, employee rates. And we already said her AGI is below 200,000. Her wages are below 200,000, so she doesn't have to pay that additional Medicare tax. So that's going to come to 38,000 times 7.65%, 2,907. All right, should be our answer. Right, it should have been withheld from her paychecks during the year. Part 3 of this question asks, determine Heather's federal income taxes, right, the daughter. Taxes due or payable. All right, and so in this one actually is going to ask you more than I've said I'd require you to know on the exam. if we look at Heather here, here's what I would want you to know. All right, so Heather has $6,200 of interest income, and she's made some prepayments. So we know, here's one thing that you should know, that I expect you to know for the exam. Heather is claimed as a dependent by someone else, right? So her mother has claimed her as a dependent. So what that means is, what is Heather's standard deduction? It's either going to be $1,100, right, the standard amount for a dependent, or earned income plus $350, right? What's Heather's earned income? 0, right? All of her income came from investment. So she gets to pick the bigger one of these, and that's going to be $1,100 for her. And remember, if she had earned income, the most that this could be is the regular standard deduction of $12,200. You can't go above that. So that's something I would expect you to know, be able to tell me what is the standard deduction for someone who is a dependent. And the other part of this, right, I wouldn't expect you to calculate her actual tax liability, but I would want you to know, is there any taxes that Heather's going to be subject to other than the regular income tax? And what might that be? So I would expect you to be able to look at this and say, Heather is 20 years old, she's a dependent, and she has investment income, right? And this income of $6,200 is greater than $2,200. That means she might be subject to the kiddie tax, right? And Heather would be subject to the kiddie tax. So I don't want you to calculate it. I mean, that'd be great if you can, right? But I'm not going to test that. I want you to be able to say Heather is subject to the kiddie tax. All right, so Heather would end up paying the kiddie tax on part of her income and her regular rate on the rest. And she would get a very small refund based on her prepayments. All right, so that's that problem. Hopefully you found that helpful. I will post another video next week going over the quiz, and also I will try to find a good problem to review, problem or two to review chapter 9 as well. Let's see here.